dear intellects, so far we have seen evolution of tax around the world and its development in India. Now we will be learning about the structure of tax in India, types of taxes, and heads of income. First, we will see types of taxes. Broadly, there are two categories of taxes in India, namely direct taxes and indirect taxes. Direct tax is paid by taxpayers directly to the government. It is levied on the income of individual and corporates. It cannot be transferred to others. Example, income tax. The second type is indirect tax. Indirect tax is paid by the taxpayers through others. It is collected by intermediaries who are selling goods and services, and they pay to the government on behalf of the taxpayer. Example, GST. The other types of indirect taxes are excise duty, customs duty, etc. Other types of direct taxes are gift tax as well as wealth tax. Again, direct taxes can be further classified into income tax and corporate tax. Income tax is a tax levied on the income of individuals or a Hindu undivided family or any other taxpayer other than corporates. Now we will move on to the heads of income. At present, there are 5 heads of income, such as income from salary, income from house property, profits from business or profession, income from capital gains, income from other sources. Income from salary. For the purpose of Income Tax Act 1961 will include both monetary payments such as basic salary, bonus, commission, allowances, etc., as well as non-monetary facilities such as housing accommodation, medical facility, interest-free loans, etc., less the allowable deductions under Section 16 with respect to salary. This head of income is applicable only to the individuals. Income from house property is one of the 5 heads of income under which income arising from a house property is liable to tax under the Income Tax Act 1961. As per the definition under the Act, a house property consists of any building or land appurtenant thereto which is owned by a taxpayer. Such a building may be used for commercial or as a residential purpose. However, this excludes a property which is used for the purpose of carrying out the taxpayer's business or profession, the profits of which are chargeable to income tax. Income earned by letting out of the house property less the allowable deduction under Section 24 will be taxed under this head. This head is applicable to all types of assessee. The term income from business or profession means any income shown in the profit and loss account after taking into account all the allowed expenditures by an assessee. The income also includes both positive, that is profit, and negative income, that is loss. In other words, profits and gains represent plus income while loss represents minus income. So both legal and illegal business incomes are taxable in nature. The income earned by the assessee from the previous year is taxable. Next comes income from capital gain. Income from capital gain includes any income derived from a capital asset, movable or immovable, is taxable under the head capital gains. Under Income Tax Act 1961, the capital gains have been divided into two parts under Income Tax Act 1961. One is short-term capital gain and the other is long-term capital gain. This head is also applicable to all types of assessee. The last head of income is income from other sources. Income from other sources, which is the last among the 5 heads of income sketched out in the Income Tax Act, is essentially a head of income that includes all receipts that cannot otherwise be classified under any of the other heads of income. So, dear students, having understood broadly about taxation, its classification, and about history of income tax, let us now head on to corporate taxation in India.